This is Alan Bush with ADMIS with the Financial Futures Forecast for Thursday, June 11th. Over in the stock index futures, we did see a little pressure in the overnight trade, but since then we have seen recovery gains as now futures trading higher on the day. First of all, the sharp gains that we did see yesterday were linked to a couple of items. One is it appears that China is ramping up their economic stimulus. Also, there were some rumors that the financial talks between Greece and the IMF had made some progress. Of course, apparently that was not the case with what we're seeing today, but in any event, the gains holding in the stock indices. So it does look like stock index futures continue to overperform the news, which is a sign of strength. Also, longer term, we would continue to expect additional gains. Now, over in the foreign currencies, we're seeing the dollar index trading higher after 3 days of declines. Technically and fundamentally, I think the dollar index is likely to head lower, which does appear to be somewhat of a minority view. Most analysts, I believe, are thinking that the dollar will head higher because of the consensus view that the Fed will be raising interest rates later this year. Our feeling is that the Fed most likely will be delaying a rate increase. So the dollar will probably not follow through to the upside, and I would not be surprised to see later today a good portion of the gains in the dollar index to be given back. Also, the commodity currencies, the Canadian dollar and the Australian dollar, trading a little bit lower today following weaker crude oil prices. But if we are right in our thinking that industrial commodity prices have bottomed, including crude oil, that the Canadian and the Australian dollars will find support a little bit lower. Longer term, we think these currencies are headed higher, and I would favor the Canadian dollar over the Australian dollar. And I think any 50 to 80 point breaks that we might see in the Canadian should be used as buying opportunities. Over in the interest rate markets, I think we have turned the corner from global deflation or deflationary pressures that are more extreme in one part of the world or another. And I think that corner has been turned, and now I think we are looking at a very gradual increase in global inflation. And I must stress, a very gradual increase is likely, but I think the situation has reversed now. And I think that is what has done all the damage to the long end of the curve, with the 10 and 30-year issues not performing that well over the last month or more. Also, we would expect, with the Fed likely to delay a rate increase, that the front end will probably hold up very well. So in the interest rate markets, look for the back end of the curve to lose ground to the front end of the curve. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.